Hello viewers, my name is Marco Mondi, an expert in private wealth management and investments advisory. I derive my joy in helping you, the investor, make wise investment decisions to help maximize your returns from whatever investments, whether it's money market, savings account, certificates of deposit, treasury bills, government bonds, mutual funds, stocks, exchange traded funds, retirement solutions, or alternative investments. So welcome to today's episode where I'll make it easier for you to understand mutual funds. I'll specifically tell you what they are, how the different types of mutual funds work, how you can invest in one, and the pros and cons of investing in mutual funds. Well, a mutual fund refers to an investment scheme usually structured as an investment company that pools money from different investors with the goal of investing in securities such as government bonds, commercial papers, stocks, and certificates of deposit. Just in case you're wondering the difference between a mutual fund and a unit trust, and of course I'll structure that as one of my lessons in one of my episodes in my YouTube series. But the main difference between a mutual fund and a unit trust is in the way they are structured. While mutual funds are structured as investment companies, unit trusts are usually investment schemes that are structured as a trust deed. There are different types of mutual funds depending on the investment objective and the expected returns, of course, plus the associated risks. First, we have the money market fund, which is a type of a mutual fund that primarily invests in short-term fixed income securities such as government bonds, treasury bills, commercial papers, and certificates of deposit. Secondly, there is the fixed income funds, which refers to a type of a mutual fund that invests in instruments that yield fixed rates of returns. And this may include government bonds and corporate bonds. And that's why they are also referred to as bond funds. There are a lot of other authors who refer to fixed income funds as bond funds. So that should not confuse you at all. Thirdly, we have the equity funds, which invest in stocks, just as the name suggests. These stocks may include companies like Microsoft, Apple, Amazon, and many other companies that are listed in the stock exchange. Finally, a mutual fund may also invest in a mix of both equities and fixed income securities. This leads us into the fourth type of a mutual fund, which is also referred to as a balanced fund. Just like the unit trusts, one invests in a mutual fund by buying units that are representative of one's shares of holdings in a particular scheme. You either buy or redeem your shares as per the current performance of the fund's investment portfolio, commonly referred to as the net asset value (NAV). And I mentioned that in my episode on unit trusts. Important to notice that any loss or profits in a mutual fund is proportionately shared among all the investors depending on their unit holding. You may want to invest in mutual funds for three main reasons. Number one, investing in a unit trust in a mutual fund gives the investors some kind of a lower risk because the mutual fund invests mainly in a wide variety of securities. So this reduces the impact of a loss from one or two assets in the fund's portfolio, just in case that happens. Secondly, owing to their professional management, mutual funds almost always invests wisely for better returns for their investors. Thirdly, compared to investing in stocks, we can also say that mutual funds have lower transaction fees. Those are the benefits. On the flip side, some mutual funds may suffer over diversification effects, especially when a fund invests in several securities within the same sector, say the energy sector. This is very risky because the fund and ultimately the investor suffers hugely in the event the sector faces serious economic challenges. The other drawback of investing in mutual funds may also be that except for the fixed income funds, All the other mutual funds have fluctuating returns that may cost an investor immensely in instances of underperformance. So ideally, returns from a mutual fund are never that guaranteed. I hope you learned a thing or two about investing in mutual funds today. That marks the end of our episode today, where we learned what mutual funds essentially are, how the different types of mutual funds work, how you can invest in one, and the pros and cons of investing in mutual funds. I hope this was helpful. Keep watching all my videos on my YouTube channel, and I wish you well in your investment journey. Thank you for watching again, and have a nice day.